I'm Widad Korukchi from UK Export Finance. I'd like to present to you what UK Export Finance does, and hopefully we'll be able to help you to secure financing for your exports. So this is basically a background to what we do. Our logo is basically ensuring that no viable British export fails for want of finance or insurance. We're the world's first export credit agency and oldest, created in 1919, and it was known as the Export Credits Guarantee Department, and the operational name of it is UK Export Finance. So we do bank guarantees and credit insurance solutions, and I'll come back to this to elaborate on it. Small exports as well as big exports. We don't have any minimum size or maximum size. We have a total customer portfolio of £15 billion that's guaranteed by the UK government. We cover all sectors, so we are sector agnostic, and we work with all the banks, UK banks as well as foreign banks based in the UK. So we are as well agnostic to the banks. We operate at zero cost to the taxpayer and, in fact, to you as exporters, in the sense that if you make use of our facilities, we are supporting the banks. We share the fees and the commissions with the banks themselves. We do not charge you extra, and the banks normally should not be charging you extra fees. So this is a schematic diagram of what we do. Now, our primary focus is on contracts of less than 2 years, but we do long-term transactions. So the 2 years for us is a short-term product, whereas for banks normally anything that exceeds 12 months is a long-term product. So we do essentially 3 products. Bond support schemes, so that's where you have a company anywhere in the world, in Africa, the Middle East, Asia, that asks you to issue a performance bond, and your bank is unable or unwilling to do it for a variety of reasons. Could be country risk, could be payment risk, credit risk, anything. Then you could ask them to contact us, or you can contact us directly, and we will try to cover your bank for up to 80% of the bond amount. So even if you have an advance payment guarantee to be issued, some banks want to keep the money as a cash margin to issue the advance payment guarantee. So that means that once the money arrives onto your account, you will not be able to use it to produce the goods and sell overseas. So what's the point in having the advance payment in that case, you might ask? In which case, you can come to UK Export Finance. We will say to the bank, we will cover you up to 80% of the amount. So if you have an advance payment guarantee on your account sitting for £100,000, the bank will release £80,000 of it to you. So you can do your working capital, you can work, you organize your cash flows accordingly. Okay? Now, the export working capital scheme works in exactly the same way as the advance payment, except that in this case you might not have the advance payment, but you will need perhaps £50,000 to get the goods manufactured and shipped overseas. So this is where you can come as well to UK Export Finance, and we can support your bank in this endeavor. Now, I use the term support the bank because we are a government agency. We're not allowed by our constitution to compete with the banks. We work in parallel with the banks. So your first port of call should always be the bank. And the earlier you contact them, the better it is, because they have to do their due diligence and we have to do our due diligence as well. So sometimes we might agree to the transaction, sometimes we don't, but in the majority of cases, we do agree to them. Now, we are open as a government agency, we are open to the majority of countries in the world, except the ones that are embargoed for obvious reasons. So the export working capital scheme, there is the pre-export financing. That's where you need the funds before you export, and the post-export financing, that's where you issue an invoice, for example, and you would like to receive your money before the 30 or 45 days or longer than that you receive your money. So you could go to your bank will discount the invoice on your behalf, but if they are unable to do it or unwilling to do it, then we will try to help you with that. We will counter guarantee the bank for the amount that they are covering you for, up to 80%. But we always like to have the bank to keep a finger in the pie of 20%. The letter of credit guarantee scheme, that's if the mode of payment that's been agreed upon with your buyer is for a letter of credit to be opened in your favor, and you will be discounting bills of exchange under that letter of credit. Then once again, or if your bank is unwilling to confirm the letter of credit, or they're willing to confirm it only with our guarantee, then in that case we will give that support as well. The insurance policy, the export insurance policy, this is very specific, where you have now all the first three products, they apply to OECD countries. So we can cover OECD and non-OECD countries. For the credit insurance, we do not cover OECD countries. So if you have an export to Germany or to Japan, we do not cover it because we consider that there is no country risk, which is mainly what this insurance covers. There is no country risk. Normally, if there is a payment risk, it would be similar to that of the UK, and you can take action against your buyer in the event of non-payment. The bond insurance policy, this is for the abusive call of bonds by a beneficiary of a bond that you've issued in their behalf. So for example, if you issue a performance bond in favor to a customer in whichever country, and the performance bond is valid for 1 year, the customer can call the performance bond. The bank will have to pay within 48 hours or 72 hours maximum to respect their signature. In which case, we can issue you, and the bank will come to you and ask you to pay the money, of course, because they have recourse to you. In which case, we can cover you on this policy. Now, the export insurance policy is the only policy that we can issue directly for the customer, bilateral with the customer, because again, in this case, you will have to go first to your export insurance company or to your export insurance broker. And if the broker is unable to help you, that's the only case that you can come to us and we can do a bilateral insurance policy in your favor. The fees that you pay us for this are very competitive. We are not in the business of making money. The money that we make out of fees and out of sharing the bank's commissions and fees are actually for the taxpayer. So they go back to the treasury. Now, for the export insurance policy, we cover up to 95%, depending on the country risk, on the payment risk. We cover up to 95%, whereas the other products we cover up to 80% of it. And there has to be, in all cases, a minimum of 20% UK content in the product. This is an absolute minimum. It used to be 80%, but it was reversed. So now we're saying to encourage exports, we want only 20%. So if you're exporting to India or China or any other country, and you need to import machinery from Germany, so long as you can show us that you're actually adding value to this equipment in the UK before exporting it. Adding value means manufacturing something, adding it to the equipment, some IT equipment that's added to it, freight forwarding, all these things come into the equation. So this is basically the bond support scheme, as I was talking to you about it earlier. That's an example that we've done in the Congo. So we have actually played the role of support to support companies where it made a difference between a failing transaction or the company not generating the turnover that it was hoping to generate. So it really does make a lot of difference. Our intervention does. This is the export working capital scheme. Again, this is a summary of it. Now, there is. I said that UKEF guarantees up to 80% of the bank facility. That means that if you have £100,000 contract need and the bank only covers you for 80% of that, we cover 80% of the 80% for obvious reasons. Arithmetically, this has to work out. So we cover about 64,000 pounds out of the 100 if the bank covers 80% of that. If the bank covers 100,000, then we cover 80% of that, which is 80,000 pounds. That's another case for the export working capital scheme. And this is a summary of the export credit insurance policy as I described it. So it covers you against the non-payment, against political risk, the non-performance for non-performance under the contract. So while you're actually producing to export, you're waiting to export, and the customer decides to cancel the contract. What do? You have the goods, but you don't have a customer for them. So you can claim under the insurance policy. Now, I have to specify that in all cases, I alluded to this before, we have to do our due diligence on you as a company, because sometimes our risk is on you. But in the case of credit insurance, we do it as well on the buyer in the overseas countries. So this is why we have to rely as well on our British Embassy support. They have the commercial section, and we have colleagues from the Department for International Trade who are actually based in those embassies overseas all over the world, and they can help us in finding out some information on your buyer, which could also be beneficial to you. Okay, that's another case, export insurance policy here. So these are all testimonies by companies, and some of them are actually in my patches. I cover Oxfordshire, Buckinghamshire and Hertfordshire, but if you need any help, if you're based in any other patches, please talk to me. I will be here throughout the day. This is our stand, UK Export Finance, and I will be able to direct you to my colleagues all over the country. There are 24 of us covering the whole of the UK, north, south, east and west, and I can put you in touch with anyone anywhere in the country. This is the Private Market Assist. Now, this is a program that we have where if the bank is unable to help you, as I said, we don't compete with the banks. So if the bank is unable to help you, I'm unable to offer you any financing or any support. What do? You can come to us, and we have contacts with credit insurance brokers. So we can refer you to a list of them. We do not recommend any of them because we're a government department. We leave it up to you to work with them. And likewise with the trade finance brokers, because if the bank is unable to help you, then there are trade finance companies who would be able to help you, not necessarily by looking at your balance sheet or by looking at the length of time that you've been in business, but they look at the transaction itself, the transaction per se, and they can decide whether they would go for it. And some of them specialize in certain countries, some specialize in turnover of companies below £2 million, because some banks refuse to finance anything, let's say, above 2 million or 5 million pounds in turnover. So exports do not stop because the banks are unable to do it. There are other financiers who would be willing to help you out with it. So this is something that you come to us, and we've done it. We do it very regularly, actually. We refer people to other export finance providers. We also have contacts with platform providers. So that means that if you have an invoice for £100,000 that you would like to discount coming from overseas, we can place it on a platform, and within that platform you will have probably 10 or 20 potential financiers who would be interested to look at your transaction and might be interested in financing it. Some of them, it's a pooling arrangement, so some of them might want to finance the whole amount, £100,000. There's no issue with that. So they will discount it for you. They will pay you in advance, and they will receive the money directly from the buyer, let's say after 45 days or 60 days or longer. Or you can have, out of the 10 pool members, you might have 5 or 6 who would be interested in each one taking a small chunk of the invoice. So one might take 10,000, the other one might take 15,000, etc. And this is just a summary. Once again, this is very important that we cover the UK-based company in selling overseas. We cover the banks for the finance that they provide to you. We have working capital repayment period of less than 2 years. In exceptional cases, we might consider, and that depends on our underwriters, what they decide, we might consider even going beyond 2 years in terms of working capital, which is really a support that is very important, because banks, as I said earlier on, the banks cover up to 1 year in short term. Minimum 20% content, no additional cost to you. And as far as I'll just backtrack on the credit insurance policy. One thing that I overlooked to put in, and that is that we cover the insurance policies not necessarily for the whole of turnover. Now, if you go to an insurance company or an insurance broker, they might say to you that we would cover the transaction for the whole of your turnover. They're not interested sometimes in a single transaction of £50,000. So if you have a turnover of £2 million, they might say to you, we'll either do the whole lot or we don't do anything. We do not do this. We can cover you for that particular transaction. Okay? So if anything that you can't meet with your credit insurance in terms of your aspirations with the particular transactions, please do come and see us. So, as I say, I'm going to be available here the whole afternoon, and I'll be happy to talk to you anytime. So please do come and see me. Thank you very much for listening.